yet.
Mm.
It's saying you need to allow me.
Oh, okay. Mhm.
Okay.
So, now we look at the first part. First is to look at the money market. So we know that the money is not there. Adveran is going to receive this money in 4 months' time, but still wants to hedge against a much anticipated stronger Swiss currency. This company doesn't have the money now.
Mm-hmm.
So what are they going to do?
They'll have to deposit to borrow.
So they'll have to borrow the money. So they'll have to borrow in dollars, which is the 6.45 million. At what rate? We have been told, since they are borrowing dollars, what is the rate of dollars? Is 3.7%.
Yes.
Mm-hmm. Right. So they'll have to borrow that. So meaning the actual amount, because if they are borrowing 6.45 million, they will not be given the 6.45 million. They'll be given amounts less than the 6.45 million because of that interest that has to be, because interest is basically fruits of their investments. So this 3.7% will go to the bank's coffers or wherever they're going to lend that money. So we are actually saying how much are they lending, which is 0.0, is it 37?
Yes.
So how much would be borrowed? Give me the figure.
Hello?
Hello?
Coach, are we supposed to multiply by the
No,
month?
you're supposed to divide because you are discounting.
Yes, no, I mean the rate because
No. This is annual. Sorry. If it's annual, do like this. Sorry. If it's annual, divide this by 3.
Yes, that's there, coach. Why 3? But it's 4 months.
12 times
saying...
12 divided by 4 months.
Oh, okay. I was trying to follow the last example, so
yeah. But does it make sense?
Yes, it does.
Mm-hmm.
Hello?
Hello?
If we get 6 million,
$6 million, comma.
yes, 371.
371.
Then 628. 629. Rounded off.
629. Okay. So now, after borrowing that, what do you have to do? You have to convert it at spot rate into safe whatever.
Mm-hmm.
Convert at spot rate. For this is, I don't see F whatever. Is it CFH or CHF?
CHF.
CHF. Okay. So if you are borrowing, which rate are we going to use here?
The bank will be selling to us, so we use the second rate.
The 1.12222. Right?
Yes.
So we'll say divided by the spot rate of 1.12222. So how much do we get as the CF whatever?
5 million. 214.
214.
099.
099. So I don't know where it sits. Is it in front? It's in front, isn't it? So it's
The currency. Okay.
Yeah, CHF. Are we there?
Yes, for some foreign.
Because we had this 63711, isn't it? Just check this number nicely. The 52 whatever, it looks questionable. 6371629 divided by 1.1222, because it looks very steep, the number that you found there.
I'm getting the same one. I'm getting the same 5214099.
When you divide the 6.371629, it's already on, Mama. What? It means that it's not strong. No problem.
They're supposed to be sleeping.
Yeah,
Somebody go now. They will hate me. Daddy, they need daddy's attention.
So let me
I'm
get
still
my
getting that,
calculator.
coach.
Let me get my calculator here. Let me get my calculator. I have 6371 629 divided by 1.1222. Me, I'm getting 5677801. 6371. Get your calculator, Musha Mush.
Yes, 6. Maybe say
6371. 629.
Yes.
Divided by 1.1222.
Oh, it's 1.1. Oh, sorry, I was missing out the 1. Sorry. You're right. It's 5, 6.
Okay, let me just see.
7, 7. Sorry, I was missing out the 1. I did 1.222. Sorry.
So it's supposed to be 5, 6, 7, 7.
Yes. 802. Rounded off.
802. Okay, so just write it somewhere.
Yes, I'm writing in the book.
So having gotten this number now, let me just write it here. So we'll say now we are actually investing. So we are investing that same amount. How much? 5, 6,
7, 7.
7, 7.
802.
802. So we are actually investing this. So we are investing this at how much? Now we are actually check on the table in terms of the investment. What rate is it?
We're investing in our country, so it's 2.7.
So it's 1 point. That is the interest rate?
Yes.
Okay, let me just slightly go up. Yeah, 2.7. So which is 1.027, right? So giving us how much?
Divide by the month.
Oh, yeah, I don't know why I'm forgetting that. I don't know why I'm forgetting that. So let me do this. So you're saying we have the 2.7% divided by 3, right?
Yes.
Now you understand the 3, right? Giving us what's the thing there?
0.009.
0.009. So it will be 1.009, right?
Yes.
So it will give us how much?
$5 million. 627.
60.
27.
How can it go lower than what we have there? It's not possible. Mathematically, it's not. Now, can you? 5677802 times 1.009. It can only go up, not down. Nakanira.
Yeah, right, coach. Yeah, 5 million. 728.
728.
I had divided, sorry, 902. Yeah.
902. This is it. That is CHF. So if you are dealing in money market, you are done with this. So now we'll have to compare. We'll have to compare with the future, with the futures, is it the currency futures?
Yes.
And when we are dealing with the futures, what should come to your mind even before you look at the question is that you have to predict the futures for those specific months in which they are supposed to happen. You can use any other method, whether you're using the spot rate or whatever, but you have to predict.
Okay.
So whatever we're going to get for the futures, we are going to compare with this and check which one will be better for the two, between the two, sorry. So now we'll look at the futures. What does the question say? So on the futures, we have been given the 3 months and the 6 months. So the 3 months, give me the number for the 3 months futures.
1.1.
1.12213. Then for the 6 months,
1.1204.
Okay, wait. 1.1.
Yes, 204.
204. Okay. Then we had the spot rate in terms of the FX on the market. The spot rate was 1.1, is it 222?
222, yes.
Okay. Then what is the contract size?
125,000.
So the contract size CHF 125,000. It's like what my condemn this 125,000. They like it, eh?
But the standard, coach, just on this one. This is how we present the answer even in the exam. Like it's okay. or you have to put some narrations.
No, there's no need. There's no need. There's no need. You can put some, yeah, but there's no need. You're in the exam, you're racing against time. You just show the 3 months, whatever. You just put these numbers before now you start putting the thing. So here, then, we know that how much is actually being invested in dollars, which we have to convert. So the first thing that we have to do, we need to, for us to convert this 6.4 5 million. Because this is what we are actually going to take into futures, investing in futures, isn't it? So before we do this, we need to first find the futures in 4 months, isn't it?
Yes,
4 months. We need to predict. So you can use any of these, either the 3 months or 6 months, depending whichever methodology, whichever method that you prefer. So first, we can say we are actually going to use a spot rate as a basis to predict this, because that is the only number that we have with the spot rate, the FX, right? Which is 1.1222. This is if we are actually saying, if I'm using the 6 months. $1.1204. What's the difference?
It's 0.0018.
0.0018.
Yes.
So this is for 6 months. So calculate for me on monthly. What would be for monthly? Divide by 6 this number.
0.0003.
0.00.
Another 0. 3.
Then multiply this by 4 months.
Comes to 0.0012.
0.0012. So I want you to predict what it would be for the 6 months, for the 4 months. So you will still have your spot rate. Your spot rate, which is 1.1222. Then here the difference you're finding, you said 0.0012. 0.0012. So this and that, you subtract, just subtract, then we are going to find, we'll be able to predict for 6 months here. We'll be able to predict for the 4 months futures.
1.1210.
Okay, wait. 1.1.
2. 10.
10. use for 3 months. Let's see what figure you get. Instead of the 6 months figure that we used, use for 3 months. Let's see what you get.
Hello?
Hello?
I'm getting the same. I don't know.
You're getting the same, so it's okay. So this is the futures that you're getting, right? So then now that we have these futures, so we can look at how much we are actually investing. We are actually investing 6.450 million. So we are using the futures. So say divided by 1.1210. So how much are we getting?
Just before, just
it's serious.
Just before I give you the answer, I'm trying to understand. For 3 and for 6 months, we still get the same answer.
There can be some major differences. You know, it's not an exact science. So obvious examiner there you didn't want to have different numbers. Wanted to have the same number, which is good.
But the reasoning, how can I put it?
Oh, you're actually saying that at least whichever method you use, you will still find the 4 months futures, which is the same. If you check the examples we used, the first example, December 2018, the numbers were slightly different. Now we used 2 methods, the numbers were slightly different.
Okay. Yeah.
Because it can't be the same. But the examiner can decide to model it in such a way that whichever way you compute it, it still gives you almost a similar number.
Okay. All right. It's 5,753. 753. 3. Then 791.
791. So how many contracts? If you divide it with the contract size?
46.03.
Obviously, you forget those to my point. So just say 46 contracts. Why? Because you are dividing this by your 125,000. It's 125,000, right?
Yes.
Which gives you this number. Yeah. So when you look at the two, you know the theory, those who can read the theory, but if you are looking at the two numbers, this is your receipt. Remember that this is your receipt. And apparently they didn't put in premium, isn't it?
No. I thought the premium usually is put kuma options.
Oh, kuma options, yeah, kuma options, sorry. So here on the receipt, which one do you think would be better? As you are just looking at the numbers, which one would you advise?
The one for futures is higher.
So?
Yes, than the forward market. Slightly though.
So definitely, you do go for that. So tomorrow, let's do part B.
Oh, okay, all right.
So from the takeaway of this thing now, regardless of what the story they put, just focus on the story. Just try to crack the story.
Okay.
Decipher the story, put the numbers nicely, follow the story. You'll find that it's not as intimidating as it looks.
Oh, yeah.
You'd miss one or two things here and there. Maybe you have made a mistake, the annual rate, you have computed the annual rate instead of computing for 4 months, for 3 months. Those are expected errors in the exam. But in terms of the principle, you should be able to get the principle right.
At least now it's making sense at least.
Because once we finish this, again, we look at 2 or so questions on these futures, whatever, because they come every exam.
Yes, it's just that they are intimidating, coach. That's even the other topics, see, restructuring what?
Those ones you can be reading, because what my plans is that if we can do again 2 papers on the futures.
Okay.
Meaning that now you have an understanding what you should do on the futures, or what you should do on the currency options, or what you should do on the money market since first year. Then we say, okay, let's look at another topic. We look at my exams. Again, we try to break it or crack the question.
Yeah, okay. That should help, yes. All right, then, thank you.
Once we do, even if we don't do extra 2, we do just another exam paper on the same. Principle might be, we can even stop. You can still continue doing these things because then it becomes easier. Then we go to another part.
Oh, yeah. Sure. All right, coach. Thank you very much.
Okay, thank you so much. Bye-bye.
Okay, you advise me then. What time likely? The whole week, eh?
Yeah, but next week I'm not
working.
Or next week, yeah.
Oh, okay. All right. Okay.